a major swing low. So that is our external break of structure. Now, how does this work together? This is the very important part, more of what you need in order to trade. All these things that we're talking about, the external structure, the internal structure, the internal structure break, the external structure break, how do they work together? Now, when you open your chart, first and foremost, go over to your higher time frame, your H4 or your H1 or your daily, and identify your external trend. Maybe you saw market break to the downside. You have identified that this market is bearish, and that is the number one. Wait for an internal pullback. Number one, identify your external trade. Number two, wait for an internal pullback. Now, how do you do that? You go down to the M15 time frame. Okay, you have this line shows you have. Okay, let's draw a new one. Now, this happened. You came on your chart and you detected this. That means a break of your external low. Let's change the color for differentiation. Okay, so at this point, what will I do? I will go down to my lower time frame. I like to use the M15. I will go down to my external time frame. And I will begin to look at my internal structure. So when you go down to your internal time frame, which is your M15 time frame, you do what? You wait, you look out for an internal structure shift. Because after that external structure got broken, you can see it got broken, market was still forming lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Now you wait for an internal structure shift, and this is it right here. This is exactly what you need to see. An internal structure shift right here when a recent internal high got broken. So this tells us that the pullback has started. Now, some people may want to take a short-term trade here. It's okay as well, but please don't do that if you don't know how to trade internal structure, and if you don't know how to manage your trade appropriately. If you don't know how to do that, please wait for markets to come back to the normal structure, which is the higher time frame structure. Okay, now when this happens, please don't get carried away. Don't say, oh, market is changing position from downtrend to an uptrend. No, this is where the common errors happen. You call reversals too early. You begin to mark market structure on just this time frame. Remember, H4 is our major direction. Do not be confused at this point. If you know how to handle a short-term trade, you want to take a scalp, a quick buy and all that, it is still fine. It is okay, provided you know how to do it right. Okay, so right here, market broke, showing us that broke this recent high, showing us that we were about to witness a pullback, and the pullback began. It kept going, and at this point it broke to the downside. At this point right here, market broke to the downside. Can you see what happened? It broke to the downside, and right here, this is where you find an entry. As a trader, when you see markets break, when you see the internal structure shifting back to the major trend. Please, what you look out for is a body break. Okay, let me zoom that in. Can you see what happened right here? What we got initially at this point was a weak break. This was a weak break, so it does not qualify as a break of structure here. We want to see a body break. Okay, make sure your line is very straight, and you can see the body break happened right here. The body break happened right here at this yellow candle. So what do? We wait for the market to pull back. You can actually go down to a smaller time frame. You can go down to the M1 and wait for market to pull back. Do you see how these time frames are actually working? Now, when the M15 showed us that market was about to go back to the H4 time frame, what did we do? What do? We can move back to the M5 or to the M1 time frame and find our entry. We want to see market pull back, so we can now if you look at the M15 time frame, if you were observant, there was a supply zone somewhere around here. So going down to the M1 time frame, you can see markets want to see that internal shift. Okay, let me not confuse you. There was a supply zone, I'm not marking this correctly, okay? Or rather, let's go back to the M15 time frame and take a look at it. Okay, I'm trying hard to wrap this up. I don't want this video to be too long. Okay, here it is. We had this M15 supply zone right here. So can we go back to the M1 time frame? Okay, so on the M1, we want to see M1 pulling back. You can see structure break to the upside, and after the structure broke to the upside, see what market did? Structure broke and still came back and broke down. When this structure broke down, we mark the origin of the break, which is this supply zone right here. This is a smallest time frame, so you have to be careful because there can be lots and lots of noise in the M1 time frame. This was the high, this was the low. This high, don't you see this? All these things happening inside here, these are just noise. These are just noise. This is the high, this is the low, and this high, keep your eyes on the high. Mark this high. The high got taken out by a body break. So this is our low, this is our high, and after taking it out, it came back and broke this low again. Now we mark the origin of the break, which is, I hope you're seeing it clearly. After market, okay, let me use this to draw it. After market broke low, this is getting confusing. Let me go back to the M5 time frame. You know, there can be lots and lots of noise in the M1. Okay, I think this is better for easier understanding. Now, after market broke structure on the M15, remember this line is actually the M15. After it broke and we go down to the M5, now we can see a clear structure on the M5, which is this pullback, lower low, and broke the high, came back, broke the low. So we need to wait for a pullback. Now this is it guys. At this point, you can actually decide to enter the trade. You can actually decide to enter a trade when the M5 shifted structure to the downside. You can decide to enter a trade, but that will be high risk. So most times I like to wait for market to retrace. What is the origin of this M5 break? The origin is right here. So I may want to go back to the M15 time frame and wait for market to come back there. Please, when you are placing your stop loss, V75 does this a lot. It usually comes and sweeps liquidity. Okay, can you see what happened right here? It came and swept this high. Okay, so you need to give your stop loss some breathing space. So M15, after breaking to the downside, it actually came back, retraced, and then boom, went down. Now this strategy is used when you want to minimize your risk. But then looking at the M15 time frame, you can see market broke, came back to the supply zone, and boom, went down. So if you don't mind, you can equally, that's a more aggressive way of entering. Okay, that's a more aggressive way. In the conservative way, you need to wait for lower time frame to do its structure break, internal structure break, before you take an entry. Okay, so this is all you need to know about the internal and external market structure. Now do understand that you need to take your time, watch this video over and over again, take notes, so that you can actually understand this, because external structure and internal structure can be quite confusing if you are not careful. Remember, external structure tells you where the price wants to go. Okay, it tells you where the price wants to go. You look at your H4 time frame and it tells you where price is going. It tells you that price is going down. Market structure is king, so don't believe anything else. You see market trending down, you know that your direction should be sales. Okay, now market structure, external market structure tells you where price wants to go. If I were here, I know that price wants, if I were right here, I know price wants to go down. That is what the external market structure does for you. Then the internal market structure tells you when to enter. So guys, please don't go guessing. You just focus on the H4 or H1 time frame and you want to execute trades. Market comes back, takes you out, and still moves in your direction. This is because you actually entered too early. So please guys, always look at the internal structure, because that is what tells you where to enter. Okay, now if this has helped you to understand V75 structure properly, please subscribe and do turn on the bell icon so you can always get updated each time you drop a video, and each time I drop a video, sorry. And remember, I break this down with real charts. So watch out for my next video for better understanding of how the volatility market moves. Thank you and see you in my next video.